Can I start or?
Sir, you are live. Just one second. Yes, you are live now, sir.
Good afternoon to everybody. Once again, thank you very much to President of our institute and Vice President and Chairman of Direct Taxation Murli sir and Indirect Taxation Rajendra Singh Bhatti sir. And thank you very much to TRD and all the officers and directors. And today I am going to deal with GST on real estate transaction. Normally, if you talk GST on real estate transaction, normally people will think whenever you purchase any flats or site, you are supposed to discharge the GST liability. To what extent you are supposed to pay, and on what is the taxable value, what is the tax rate, everything we will discuss today. Our members and whether they are in employment or in practice. Those who are in practice, maybe they are consultant to so many construction companies. Those who are in employment, they are the end user. One or the other day, whether they will buy flat or plot or whatever, depending upon the situation. Maybe some people they will purchase the land and they will construct the house. And some people straight away they will purchase the flats. Depending upon their convenience, their interest, everything. As a professionals, if you want to buy a flat or a villa or a independent site, just you have to know what is the impact of GST. That is one part. If you are a consultant, you are supposed to guide your client tax implication to what type of combination, whether it is a one project or a joint project, how to transfer the flats to the landowners, what is the tax implication, all these things we will discuss today. I think my voice is clear. Dear members, you can react by sending the message because it is helpful for me. In between also, in chat box, every 10-15 minutes, I will go through the chat box and I will reply each and every query. And before that, one or two people, if you confirm my voice and PPT, everything is good, I will continue. Now, today we are going to deal with a real estate transaction. The second schedule of CGST Act activity to be as supply of goods or supply of services. Why? Normally, whenever you are selling the flats or a land or a constructed house, after completion, if you sell the property, it is an immovable. There is no question of GST. But during the course of construction, if you book a flat or an apartment, flat in an apartment or an independent villa or plot under development stage, you are supposed to discharge the GST. Now, before that, whether it is a goods or service, if I ask some normally whenever I am taking a class to the students, I will ask whether what I say goods or service, whether selling a flat is a goods or service. Normally, I used to get a lot of answers, sir, it is a goods or it is a service, all these things. If you go through the second schedule, it is a declared service to the extent of service portion. Okay, you are supposed to discharge the tax liability. You are eligible to take the input tax credit. Okay, in case of works contract, if it is a up to 1/4/2019. Okay, if it is a selling a flat, then there is no question of input tax credit. but you are supposed to discharge the concessional rate of 5%. All these things one by one we will discuss today. Now, it is a works contract. What is works contract? Section 2119 of the CGST Act define works contract means contract for a building construction, fabrication, completion, erection, installation, fitting, so on. It means there is a contract between the builder and end user, or otherwise if you give a construction contract to the some contractor, then it is automatically a works contract. It is taxable. How to tax it and all we will discuss one by one. But anyhow, it is a works contract. What is a residential real estate project? A real estate project which is carpet area or the commercial space is not more than 15%. Normally, see, I have one is 11/2009, 17 is a rate notification, and 3/2019 it is a whatever paradigm shift from earlier whatever construction to 1% or 5% without input. See, in case of builder, we know very well the getting whatever proper input tax bill is very difficult because of that they are having a concession. If they are having a 80% of their purchases with a valid input tax, then 20% absolutely no problem. Sand and all these things you will not get any proper input tax bill. That is why what is residential project, you know very well. Nowadays, if you go to any apartment, what they will do, they will construct an apartment. Along with that, they will construct some commercial space for usage of residents. Say like 10 to 15% or 10% or 20%. It's all depending upon the situation. The commercial space will be there. If it is less than 15%, that is called residential real estate project. Normally, there is a RREP and REP. REP is a real estate project and RREP is a residential real estate project. Okay. Now, what are the material they are using? See, it is not an exhaustive list. Just I have given an example. And what is the rate of tax? Sand is a 5% and sand, ply and ash bricks is 12%. Steel is 18%. Paints is 18% and marble, granite, cement and all 28% and 18%. Say, for example, all these things are you are supposed to buy and they will construct the building. On that, they are supposed to discharge the tax liability. Type of pay. See what type of project normally it will come. You know, basically development of land and development of flats. Two types of real estate transaction. Other than that, commercial complex, all these things are there. Normally, development of land means sites and development of flats and third one is development of commercial project, that also there. One project, say the developer, if he purchase the land, if he develop, then that is called as a own project. There is a lot of tax implication between the own project and joint development project and contractor, developer, builder, landowner and end customer. Each and every stages, what type of implication, what type of taxes they have to pay, all these things we will discuss. The one project, what they will do, developer, they will buy a 10 or 15 acres land depending upon the position. Maybe some of the big builders, they are developing 40-50 acres also. Some of the big developers, they are developing 100-125 acres also. What they will do, they will purchase the land. They will construct the building and they are selling. During the course of construction also they are selling and after completion also they are selling. There is a lot of difference between if they sell during the course of construction, and if they sell after completion, the tax implication. First, one by one, one project is a, they have to purchase the land, they have to construct it, whether it is a land development or a flat development, there is no whatever this one project. Joint development project, what they will do, landowner will commit a land, developer will develop the land or a plat, that is called joint development. Contractor, he will do only works contract job, either it is a civil or electrical or something else, plumbing or whatever it may be. He is a contractor. Then developer is a person, he will develop the land or a plat. Builder, he is also nothing but a developer, he is builder, this one. Landowner, he will supply the land to the developer, and end customer, what ultimately who is buying the plat. Now, one by one, we will discuss land development, one project, construction of a plat. In case of land development, what they will do, they will develop the plot or site and construction of a plat. First, we will discuss land development. Okay, taxable only if the plot are sold before completion. Say, for example, if I purchase 10-acre land, I will fully develop the land, and after the completion of development, if I sell the land or a site, then there is no question of tax liabilities in it, is an immovable property. Okay, we know very well. See, sale of immovable, okay, it is not taxable at all under GST. Okay, sale of immovable property will not attract the GST. Taxable only if the plot are sold before completion. That is what I am putting here. Taxable portion only development charges. Time being, we will discuss only land development. Say, for example, if I purchase a 10-acre land, to the extent of development charges, that is taxable. Land portion is not taxable. Now, land development, see, the developer will develop the land, they will sell it to you. Then whenever you are purchasing the land, what he will do, there is a land portion, out of 100 rupees, land's portion is say around 75. Remaining 25% is a development charges. On that, he will levy the GST. Then rate of tax is 18% on development charges. Input is allowed. Development charges either 25% based on advance ruling. Here there is a Karnataka advance ruling authority said. See, initially, most of the developer, they have not discharged the tax liability due to, based on their understanding, it is an immovable property. There is no question of GST. Then so many department people, they have visited the builder's office and they told, no, you, no doubt at all, you are selling the site. It is a immovable property. But there is a portion of development charges on that you are supposed to discharge the liability, because during the course of construction or during the course of development, all these prospective buyers, they have paid the advances. On that, you are supposed to discharge the tax liability. Then litigation has started. Then somebody has filed the advance ruling. Then in advance ruling, Karnataka advance ruling authority, somewhere in 2020, I don't know exact date, they clearly said to the extent of 25% is a development and you are supposed to discharge the tax liability. Then it's all depending upon the land and land value. That development charges will vary. Maybe it is from 10% to 40-50% also. In a heart of the city, land cost is too high. There, your land cost is more, maybe 90% also. Only development charges is 10%. If you go to the remote area, maybe your development charges is 50% and 50% is only land cost. It's all depending upon the situation. but in future there is a lot of litigation will come, no doubt at all. And second method, I am also as a cost accountant, practicing cost accountant, there is a huge opportunity. What you can do, development charges, builder will get a certificate from you. Based on that, he will discharge the GST. That is a very good method. Always I am advising builder to discharge the tax on development charges so that there is no litigation. Whatever your books of accounts, whatever development charges you are booking in books of account, on that if you discharge the tax liability after deducting the input tax, then there is no question of litigation. But in the case of 25%, there is a litigation. Sometime you are supposed to pay more tax, and sometime maybe you will discharge less tax liability. Then litigation will start. All these things are common. Then land portion is not taxable. See, and already I have given an example. Out of 100 rupees, maybe 60% or 75%, 80% is a land cost. On that, no need to discharge the tax liability. But question is arriving land cost, whether it is a 75% or 25% or some other value, it is very difficult. That is why here cost accountants, practicing cost accountants, they are having a very good opportunity. If you certify the cost of development charges, builder will discharge the liability on that. Then there is no question of litigation. Even then, here and there, small litigation will come. That is okay, manageable. Now up to this, if the members are having any question, I will reply it. Otherwise, I will go next. Normally, my style of presentation is each and every 15-20 minutes, I will interact with our members so that within 15-20 minutes, whatever I have explained, if they are having any doubt, immediately I will clarify depending upon the situation. As of now, there is no question. Okay, there is no question in chat box. Good, not a problem. Okay, members are free to ask any question relating to this. Absolutely no problem. Okay, I will go next. Construction of a plat. Now, see, we are discussing one project. Now, construction of a plat. Here, there is a statutory deduction for land cost that is 1/3. Now, taxable only if the plats are sold before completion. Once again, you are constructing the plat. Nobody is interacting. The presentation is okay. Dear member, please interact. I am seeing the chat box. There is no. Yes, clear, sir. Absolutely no problem. As of now, there is no question. Very much clear. Good. Okay, tomorrow membership. Okay. So, okay. As of now, there is no question. Okay, now once again, I will go to the PPT. Now, taxable only if the now construction of a plat. Development of plants is one part and construction of the plats. The taxable only if the plats are sold before completion. Taxable portion only construction of a plat. Rate of tax is 18% up to 1/4/2019 and ongoing project. Otherwise, the rate of tax is 5%. Input is allowed. Land cost is 1/3 of total amount and on advance received, or if you paid at one shot on that. Okay, this is construction of a plat. Normally what they will do, we are discussing the one project. In case of one project, they will take piece of land of 5 acres or 10 acres. Out of that, they will construct a plat. Then after construction, prospective buyers will book the plats. Based on booking advance or time to time each and every month or alternative month, you are paying 5 lakh or 10 lakh. On that, they are deducting the land cost 1/3. On balance amount, they will calculate the tax liability of 18% and whatever input they will take it. That is the form. In that form, they will do it. Now, joint development. Here there is a need to discuss lot because here 3 parties. One is the developer, second one is landowner, third party is prospective buyers. Developments of site or a plots, development of construction of flats or apartments. Now one by one we will discuss. Parties involved: landowner, developer and prospective buyers also involved. Landowner, what he will do, maybe he is having some ancestral property or otherwise they will buy some land and they will give it for joint development. Developer is a builder. He will take a land under joint development agreement and he will develop the plats, and landowner portion, depending upon the agreement, maybe he will sell to prospective buyer or otherwise he will transfer to landowners, and his own plats, whatever developed, he will sell it to the end customer. Now, transfer of development rights, how it will work out. The development rights is payable by the landowner under forward charge 1/4/2019. Now, before that, we will discuss little bit joint development, how it will happen. What is the implication 1/4/2019 and after 1/4/2019, that we will discuss. See, in case of joint development, one is development of sites, second one is development of flats. In case of development of site, landowner will give the land to the developer, developer will develop, and he will transfer the certain portion based on development agreement to the landowner. Balance sites he will sell it to the prospective buyers. Say for example, development will take 4 to 5 years or 2 years or 3 years. It's all depending upon the situation. At the time of development, what he will do, initially itself, he will start to take the advances. That is why during the course of development, those who are booked on that, they are supposed to pay the GST. Developer will collect the GST and he will pay to the government after deducting the input tax. Transfer of development right, GST on development is payable by the landowner under forward charge before 1/4/2019. Say for example, if they give a development to the any developer, if the project is started before 1/4/2019, landowner has to discharge the tax liability under forward charge and RCM. Just before that, I will discuss what is forward charge and what is RCM for the benefit of our members. Say for example, if the landowner, he is transferring his land to the developer, if he discharge the tax liability, then it is a forward charge. If the developer discharge the tax liability, whatever land he is getting on that, then automatically it is a RCM. Here, before 1/4/2019, in case of development, landowner has supposed to discharge the tax liability based on forward. Rate of tax is 18%. Then, when the builder transfers the position to the right in the constructed complex or a building or a civil structure to the person supplying the development rights by entering into conveyance deed or similar instrument, then that date is a date of or time of supply. Okay. Now, sale of units tax rate by builder to end customer or a landowner to end customer by a landowner after 1/4/2019. Say affordable residential apartment RREP, okay, 1.5%. That too, 1/3 is a land cost deduction. Net rate is only 1%. Other residential apartment after 1/4/2019, once again it is very important, 7.5%. After deducting the land cost, it will come 5%. Commercial apartments 7.5%. Then affordable residential apartment 1.5%. And affordable residential REP 7.5%. All these rates are before deducting the land cost. 1/3 land cost is allowed. Net rate is 1% and 5%. Okay, subject to condition number 1. That condition we will discuss. Construction of a complex building or a civil structure, commercial apartment and residential ongoing project other than affordable residential in respect of which promoter exercise the option. Here, what option is available to the builder? Say, for example, I have started my construction from 1/7/2017 or before that. From 1/4/2019, there is a scheme. If I want to continue with the same method, then I have to apply to the commissioner, assistant commissioner of my jurisdiction. Then he will allow to continue as it is. Then automatically rate of tax is 18% and land cost is 1/3 and you are eligible to take the input tax credit. For commercial apartment, in those who are more than 15% commercial, all these things, for them there is no option. They are supposed to discharge the tax liability 18%. Residential apartment, if you have opted for old scheme, then automatically you are supposed to pay 18% with a deduction of 1/3 land cost and whatever your input is eligible. Then condition we will read. Okay, say for example, if you satisfy that condition, then only that option is available. GST should be in cash through electronic cash ledger and ITC attributable units whose time of supply on or prior after 1/4/2019 shall be reversed. Say for example, on 1/4/2019, okay, if I not satisfied that condition, if I want to go for new scheme, then automatically GST shall be paid to the cash ledger. Say for example, after 1/4/2019, even if you are having a credit, you are supposed to reverse it. Whatever 5% or 1%, depending upon the situation, what tax you are paying, you are supposed to discharge through electronic cash ledger. Builder shall pay GST on unit transferred to the landowner, if any. Then landowner is eligible to avail the ITC on GST charged by the builder on unit transferred to the landowner, provided to sell the customer before OCCC and pays the GST not less than GST charged by the builder. Say for example, if the builder is charged 18%, he has to pay 18%. If the builder is charged 5%, 5%. Then to go to the new scheme, or if you want to pay the tax in new scheme, 80% purchase will be supported by the RD purchases. What is RD purchases? Say for example, you are buying a cement, you are buying a steel, all these things. Out of total 100%, 80% should be RD, registered dealer purchases. To calculate 80%, you have to exclude all these things. That is development rights and long-term lease land, electricity, high-speed diesel, motor spirit, natural gas, all these things you can exclude it. After excluding all these things, your purchase value RD purchase value should be 80%. Okay. Now once again, I will go back to question and answer. Now good. See the okay, now good afternoon, audio PPT is very clear. Now one by one I am getting the question. I don't have chat option. It is only option to ask the question as far as okay, no question. Absolutely no problem, no problem. Sir GV Prasad, CMA GV Prasad, he is having one question. What about the goodwill received by the landowner for parting with the land? It is not a towards the percentage of land that is shared by the developer. Is GST still payable by the owner? No doubt, sir. In goodwill, two types of deposits. One is refundable deposit and another one is goodwill. If the landowner receives the goodwill, he is supposed to discharge the tax liability if it is not refundable. If it is refundable, there is no question of tax liability. GV Prasad sir, probably I have cleared your doubt. If you are having some more question, you can ask. Is the certification is required by the cost accountant? If so, what is the limit? Sir, certification from cost accountant is not mandatory. CMA Nishkant Jigar, membership number 20,918. Sir, your question is certification is required by a cost accountant. If so, what is the limit? There is no question of limit, sir. If the builder want to discharge the tax liability based on development charges, normally department is asking certificate from the cost accountant. Because of that reason, some of the big builders, whenever they are discharging the tax liability based on development charges, automatically they are getting the certificate from cost accountant. I am also certifying so many certificate to the builders, those who are discharging the tax liability based on development charges. It is a very good opportunity. Nishchita sir, if you are having any other question, you can ask. Okay, as of now, there is no other question. We will go to in case of joint development of a land, only GST payable by the developer or landowner on development charges. Sir, in case of joint development, developer has to discharge the tax liability on landowner portion, but he has to collect the tax from the landowner. What is ultimately he has to pay to the government. See how it will work. He will take the land, he will develop it, and he will transfer his portion, landowner portion, to the landowner. Maybe say, for example, if he take 1 acre, maybe he will develop around 50 plot. Out of 50 plot, maybe 40% or 50% to landowner. Then he will transfer 25 plot to the landowner. On that, developer has to raise the invoice to the landowner. Whatever applicable GST he has to collect and he has to pay to the government. Now, out of that, say for example, on 25 plots, he has to calculate the total value and whatever land cost he has to deduct. Only on development charges he is supposed to discharge the tax liability. Sir, we are covering topic of airspace selling commercial property. If not, can be you briefly detail of hypothetical way. Mr. A buys virtual commercial space and gets the rent for the owners. It will be the GST. Sir, on commercial rent, there is a GST. You are supposed to discharge 18% GST. Oh, whenever you are getting the rent, then automatically you are supposed to discharge the tax liability. To developer, there is a Orissa High Court decision. Whatever he is using material for development. That he is eligible to take the input tax credit. But there is a litigation. The matter is in Supreme Court because it is a immovable property. the government don't want to allow the input tax credit. But even then, the depending upon the Supreme Court decision, maybe they will proceed. So this question is, we are covering the topic of airspace selling commercial properties. If not, can you brief tell the GST on hypothetical example where A buys the virtual commercial place and gets the rent from the owner? So that is what, sir. If you buy the property, commercial property, if you give it for rent, you are supposed to discharge the GST. But over and above the rent, you are supposed to raise the GST invoice and you can collect from the customer. That is possible. Okay. Now there is no other question. I will go next. Just I will take 1 minute break. And also, and those who are asking question, whenever I am replying, if you satisfied, well and good. Otherwise, once again, better to ask your query. Otherwise, I will not come to know whether you will understand or not. That is why, if you ask query, whatever my explanation, if you are able to get it, well and good. Otherwise, once again, please ask the question so that I will clarify once again. Now, as of now, I have clarified all the queries. Now, once again, I will. Niranjan Mishra, sir, what are the items or line items of cost to be excluded while calculating the 80% total cost? Niranjan Mishra, sir, just now I have explained. Once again, I will go back. See, 80% of the value of input area other than services by a grant of development rights, long-term lease, electricity, diesel, motor spirit, natural gas, all these expenses, okay, that you can exclude. Okay, then remaining thing, it should be 80%. Okay, all these expenses you can exclude it. Okay, see, because all these purchases automatically, even though they are not paying GST, okay, for calculating that limit, you can exclude it. It is deemed to be purchased from registered dealer. All other expenses automatically you have to include it. These expenses you can exclude it. Maybe I have replied to Niranjan Mishra sir question. See, somebody is telling seminar is not being seen. Okay, that is, I don't know what the seminar, what should do. Sir, Niranjan Mishra sir, probably I have replied your query. Whatever listed out, just now I have shown the PPT. That expenses you can exclude it while calculating the 80%. That expenses deemed to be purchased from registered dealer. That is what? That is the intention of the government. Okay. What we should do, CMA is, okay, good evening. See, maybe somebody asking to Niranjan Mishra, sir, Seminar is not sealed. Okay, very good. Builder has signed the agreement with the landowner. Niranjan Mishra sir is asking. Builder has signed the agreement with the landowner to develop the and construct the plats and share same plats to the landowner. When the tax liability will arise for the landowner share of plat and who will bear the GST liability? Really good question, Niranjan Mishra sir. Say for example, whenever you are having a joint development agreement, okay, you will transfer the landowner share after getting the CC, or you are giving the position at the time of completion. At that time, you are supposed to discharge the tax liability. What is the valuation? Valuation is first booking date. Say for example, I will start the construction from 2020. I will complete in 2023. After completion, I have to raise the invoice to the landowner. What ultimately GST liability I have to collect from the landowner and I have to pay to the government. Then what is the valuation? Valuation is whatever first booking date. Maybe somebody has booked the plat 2020 at the rate of 5,000 rupees per square feet. Then I have to take a 5,000 rupees as a base. I have to calculate the liability, whatever I am transferring to landowner, and I am supposed to discharge the tax liability. Okay. Now, in case of shortfall 80% purchase, now I will Niranjan Mishra's question I will clarify. Builder has the sign agreement with the landowner to develop and construct the plats and shares some of the plats to landowner. When the tax liability will arise? Completion. On completion, tax liability will arise. Landowner share of plat. Who will bear the GST liability? Landowner has to bear the GST liability. Okay. Developer will raise the invoice along with the transfer and he will charge the GST to the landowner. After collecting from the landowner, he will pay to the government. Now it is very clear. Okay. Now in case of shortfall of 80% from RDs, what is the tax rate required to be paid by the builder? Sir, tax rate is 18%. You are supposed to discharge it. NNV for the Sarathi, sir. Okay. Whenever if there is a shortfall, you are supposed to discharge the 18% tax liability or whatever. Say for example, that is why what I am telling, if there is a shortage, okay, it is very difficult to identify which product is short. That is why they have advised to discharge the tax liability of 18%. Now, I think I have clarified Niranjan Mishra sir query as well as this one 80% purchase also. Next, I will go to the PPT. Then once again, I will after some time I will come back to query. Now, the provided that other condition we will discuss now, where the value of the input services received from registers during the financial year or part of the year fall short state threshold 80%, central tax shall be promoter value of input or input services such as are at the rate of percentage reverse charge basis 18% you are supposed to discharge. Where the cement received from unregistered person, promoter shall pay tax on supply of such cement at the applicable rate under reverse charge basis. That is why, according to my opinion, it is very difficult which material is short. But if you buy a particular product from a dealer, then applicable rate you can apply. Say for example, what you can do, sand is only 5%. Okay. If there is a shortage, what you can do, I have purchased this much of sand with so and so person, and whatever all e-way bill, all the proof, if you are able to produce, then automatically you are supposed to discharge only 5%. That is also possible. Tax on cement received from the unregistered shall be paid month in which the cement is received. Improved credit not availed reported every month. Repeat same will be eligible for credit. Now condition number 2. This is for commercial project. Those who are paying 18%. In the ongoing project, registered person shall exercise on time option in the annexure 4. Okay. For ongoing project, you are supposed to file some declaration to Assistant Commissioner of Jurisdictional Authority. If you give that annexure, if you give that declaration, whatever your ongoing project, you are supposed to discharge 18% tax and you are eligible to take the input tax credit. You can continue with that system. Maybe somebody is thinking 1/4/2019 they have come with a new scheme. Still, why it is relevant? Because some of the project, it is even 10 years or 9 years, 8 years old project, and identifying the WIP as on particular date is very difficult. And some of the people, they are comfortable with input tax credit and paying 18%. That is why still government has given option, the project undergoing or project not yet completed at the time of 1/4/2019, they can opt this method. That is possible. Okay. Provided also that where the option is not from a annexure 4 to the no option to pay tax rate applicable, whatever new scheme is applicable, they are supposed to discharge 1% or 5% depending upon the situation. Affordable homes budget is only 45 lakh and there is a square feet 960 square feet, some limit is there. For that they are supposed to charge 1% without input tax, for others 5%. Then time of supply, okay, sale of units, time of remarks, all these things one by one I will discuss now. The by builders to end customer, date of invoice or receipt of payment, whichever is earlier. Okay, here there is no difference between whatever project. Whenever you are selling builder to end customer, each and every receipt is taxable normally in case of builder. Date of invoice or receipt, whichever is earlier. Say for example, if you raise the invoice on 31st March, if you receive the payment on April or May, then automatically taxable event is March. If you receive a money in March and if you raise the invoice in April, once again taxable event is March only, whichever is earlier. In case of builders, normally people what they will do, each and every receipt they are supposed to raise the invoice. They will raise the invoice. Okay. Then by landowners to end customer, during the course of construction, if the landowner sells any developed sites or a plat, automatically he is supposed to discharge the tax liability. Okay. Then what is the event? What is the time of supply? Is date of invoice of receipt or payment, whichever is earlier. Then by builder to landowner, you are transferring the developed plat or a plot to the landowner. When the builder transfers the position or right in the construction building or a civil structure to the person supplying the development rights by entering into conveyance deed or similar. 1/4/2019 agreement. After 1/4/2019, the tax period is related the tax period with the date of issuance of completion certificate for the project where required by the competent authority or date of first occupancy, whichever is earlier. Normally what will happen in case of construction, they will complete the building. Okay. They will give the position, but completion certificate they will receive after 1 or 2 years, because it may be around 5 to 10% deviation will be there, or government so many rules. Because of all the reason, they will receive the completion certificate after 1 or 2 years. Then automatically the event of tax payment is first occupation date and completion certificate, whichever is earlier. How we will trace these things, how department will trace out? What they will do, they will take the electricity bill. They will take the occupancy certificate. All these evidences, they will take it. Okay. Then based on that, they will book the liability. That is why once the first occupancy, then better to raise the invoice to the landowner and better to collect the tax liability and better to discharge it. That is my advice. Now, okay, valuation. Normally, valuation is the big problem in case of joint development. There was even now, some of the officers, they are interpreting. Say, for example, first booking date is 2020, completion is 2024. Some of the officers are arguing, you are transferring the property in 2024. You are supposed to discharge the tax liability based on market value of 2024. That is not correct. Act is very clear. 2024, you are supposed to discharge the tax liability based on first booking value. That is the valuation. Okay. Now, JD enter after 2019, area sharing, all these things. Okay. Now, transfer of development prior to the 1/4/2019. Now, once again, I will go back because see, GV Prasad. Slide is not clear. I don't know if the booking amount is varying. Niranjan Mishra sir is asking GST applicable. Now one by one I will come. Now up to short form. Now that I have developed. So many good evening and good afternoons are there. Okay, thank you very much to each and everybody. There is no name actually. Good evening, sir. In the course of constructing the plat, unfortunately, the developer may get insolvency declaration received from the competent authority. Then who will pay the GST? Sir, automatically, even company under insolvency, liquidator or a resolution, IRP or a resolution professional, they have to discharge the tax liability. That is their responsibility. Okay. There is no question of escaping the GST liability. Whenever they will sell the flats or a plots, the resolution professional or a liquidator, they are supposed to discharge the liability. GST applicable on two projects, one in old scheme, another one project is start after and maintain the accounting separately and file one return. Okay. This question is a little bit confusing. Okay, that if the booking amount is varying, Niranjan Mishra sir, see that the booking amount, if the booking amount is varying, then see the thing is in the same day, if the booking amount varies, okay, what you can do, whatever lower amount you can take it, or time factor also very important. First booking, that is what they told. Say for example, anyhow booking receipt will have a serial number. Serial number 100 booking value is 5,000 and serial number 101 is booking value is 5,100. You can take 5,000 rupees, sir. That is possible because first booking receipt serial number, you can take it as a base. Maybe your question is that, I think so. See, somebody is asking GST about two projects. One is old scheme, another one is new. One project start after 1/4/2019, maintain the accounting separately. Absolutely no problem, sir. GS Sani, sir. Okay, if you are having a two project, one ongoing project, old system you can follow. For new project, okay, then you can apply new project. new rate of 5%. That is possible. That is the question. GV processor is collected. In case of development land only, if the developer has already collected the GST from landowner and development charges and paid GST, each GST has to be again collected by the landowner. Sir, that is what? During the course of development, if the landowner sells the property, even if he pays the tax on whatever to the developer, he is supposed to discharge the tax liability. But whatever bill he is getting from the landowner, he is eligible to take the input tax credit. Today, Niranjan Mishra sir is in full swing. Tax rate is varying 5 to 28%. What is the checkpoint for the taxing authority to know the proportion of material used in construction? Sir, there is no mechanism as such. Okay. What they can do is they can take the bill of material. Once again, they can get the certificate from the cost accountant and how much each and every material they have used. That bill of based on bill of material, maybe they can analyze based on my practical whatever experience. Normally officer will not go to that extent, but even then some shrewd officer maybe will go to that extent. That is why, see, in whole project, say for example, to fill the 80%, you can't buy sand. It is a proportion of sand, steel, cement, hardware. All these things are required. That is why better to maintain the whatever bill of material. Okay, if you are having a bill of material, if it is in that proportion, definitely you are able to manage. At what time RCP and TDD is to be paid by the sir? See, that is why before 1/4/2019, TDR is taxable based on forward charges. Whenever agreement happen, immediately they are supposed to discharge the tax liability. After 1/4/2019, TDR is exempt subject to sale of property. If you have not sold property to the extent of balance, you are supposed to discharge the tax liability under RCM at the time of completion. That is why time is before 1/4/2019 agreement. After 2001 1/4/2019 TDR is taxable at the time of completion. Okay, if you have sold the whole property, then there is no question of taxation of TDR. Now I have replied each and every query. If the members are having some more doubt, they can ask the question. Now I will go to the PPT. Now, transfer of development right prior to 1/4/2019. GST on development right is payable by the landowner under forward charge. Tax rate is 18%. Time of supply at the time of joint development agreement. When the builder transfers the position on the right in the constructed complex or a civil structure to the person supplying to the development right by entering into a conveyance deed or similar instrument. After 1/4/2019, situation is totally different. GST on development payable by the builder under RCM. Exemption is available for the residential apartment if it is sold. Tax rate is 18% or 5% depending upon the new or old. GST payable on development rights, carpet area, residential apartment into total carpet exempt amount. Say for example, if you have sold 80% at the time of completion, only 20% is taxable. That is the formula. Builder pays the GST under RCM on such a value development rent as a attributed resident remaining unbooked on completion certificate or occupation certificate. Time of supply is in tax period not later than tax period in which the date of issuance of the completion certificate for the project were required by the competent authority or date of its first occupation, whichever is earlier. Very, very clear. TDR before 1/4/2019, joint development agreement, that is the time of supply. Valuation is market rate at that time. But in the case after 1/4/2019, valuation is first booking date. The tax portion is to the extent of unsold and on unbooked or at the time of CCR, OC or first occupation. This is the concept. Now this is a small chart. Okay, after 1/4/2019, residential project 1% or 5%, commercial project 12% after deducting the lost land cost, mixed, then residential commercial 1% and 5% and 12%. Okay, this is the small chart. Whatever I have explained, I have presented here. Okay, now legal background of GST, builders and developers. GST laid on construction of development services. All these things are almost all explained. What is the schedule to, why it is a service, why you are supposed to discharge tax liability on immutable, why tax is not taxable. All these things I have explained. We will go to the next slide. Place of supply in respect of works contract. Okay, works contract and it would be necessarily immovable property. In view of the same, place of supply would be governed by 12(3) GST Act 2017, where the both supplier and recipient are located in India. Just I have explained the some of the definition. Now position, maintenance of cost records, that is very, very important for professionals. Okay, what type of records builder has to maintain? Names and address of the person who was contract is executed, all these things that we will not discuss much. Now tax rates without RTC for housing project with effect from 1/4/2019. Once again, I have made a list. Just go through it. Okay, this one 1% affordable, all these things ongoing 5% and new project other than affordable 5% and 1% project with a commercial space. Okay, now some of the FAQs we will discuss. Okay, or otherwise, if you ask the question, that is better for me, because see, whatever I have covered FAQ, maybe it is not exhaustive list. Some few FAQs I have covered. Rest of the thing, what you can do, you can ask the question, I will reply it. Okay, condition to be satisfied for availing the above rates. Above rate means whatever 1% or 5%. Input tax credit claim, ITC can be claimed. Purchase of input, registered person, at least 80% of the total value of input services should be purchased from the registered dealers. However, these things can exclude it. Okay. Grant of development run, long-term lease, space index, value of electricity, diesel and motor spirit. If you are having these type of expenses, you are in your P&L account, just exclude it. Then you have to calculate 80%. If you are unable to fulfill 80%, you are supposed to discharge on the balance value. What is the affordable residential apartment? Affordable residential apartment is on which carpet area is 60 square and for metropolitan city and other than metropolitan city 90 square and gross amount charge is 45 lakh and PMI or that scheme 160 square meter. All these things are there. If you satisfy all these conditions, it is a affordable residential project. How to calculate 5 lakh limit while checking the eligibility for an affordable housing project? You have to consider all the charges, including preferential location, parking, development, common facility charges, etc. while calculating the 45 lakh limit. That itself is a big litigation. That is why what are the charges we have to consider while calculating the 45 lakh, that definition is there. However, you can exclude the stamp duty, maintenance charges, deposits for maintenance of apartment and maintenance of common infrastructure. See, normally what will happen? Builder, what they will do? They will charge basic rate is 5,000. Over and above, he will charge 1 year maintenance, stamp duty, and all electricity deposit and clubhouse deposit, all these things. What is the, while calculating the 45 lakh, what to take and what not to take? This is the FAQ. Do you have to pay GST on a single residential house. If you bought a single residence before obtaining the completion certificate from the competent authority, you have to pay GST. However, if the seller has received the completion certificate before the agreement, you don't have to pay the GST. That is why so many builders, they are advertising, we are selling our flats after completion, after receiving the CC completion certificate or occupation certificate, there is no GST. That is what they are giving the advertisement. What they will do it, all these things, whatever their cost, they will load it. That is a different issue. That is a selling technique. Even then, okay, for completed project, there is no question of GST. What is the time of RC1 TDR is required to be paid by the developer? That already I have explained. Still, if you are having a doubt, I will explain to you. Okay. Now, as of now, there is no question. Once again, I will go to PPT. What is the GST rate for a single residential house? 1% or 5% depending upon the situation. What is ongoing project on 1st April 2019? A project is considered on an ongoing project if the following conditions are satisfied. Say for example, so many litigation is going on just because of whether it is an ongoing project or not. Where the commission certificate is required and has been issued by the competent authority before March 2019 and same is certified by registered architect or a chartered engineer or a licensed surveyor that the construction of the project is started before 31st March 2019. In case of a single tower comprising of 50 floors and registered as a single project, separate commencement certificate may be issued by the competent authority. If one or two certificate received on or before 31st night, same later, the till considered an ongoing project. Say for example, some of the big builders, they are having 5 towers. They have started only 1 tower. Rest of the tower they will start in later stage. Whether that project all 5 towers are ongoing project or not, that is a big question. Because of that, they have said clearly, okay, the commencement certificate for a single tower, even if it is for a single tower, if you received before 31st March 2019, then absolutely no problem. That project you will consider as a ongoing project, that is possible. Commencement certificate were not required to be issued by the competent authority, then same shall be issued by the registered architect or chartered engineer. Say for example, some remote area, maybe commencement certificate is not required in a panchayat or some areas, then certificate from a registered architect or a chartered engineer is more than sufficient. That they will consider that a ongoing project and you can continue your with old tax regime. Say for example, you are supposed to discharge 18% tax liability and you are eligible to take the input tax credit. That is possible. Then completion certificate not issued before 31st March 19. If the project has 3 blocks and completion of certificate is received 1 block prior 1/4/2019, rest are received after this date. In such a case, project is ongoing project because as per the notification issued by the government, project is complete only if the completion certificate is issued. The first occupation has not been placed on 31st March 2005. In instance, if an occupation certificate is received only for a part premises in use project and not entire project, same is considered ongoing project. Apartments are partly wholly booked by 31st March 2019. All these things are considered as a ongoing project. This condition is not applicable for the redevelopment or slum rehabilitation. All these things that is not applicable, and the project where the bookings have not started, but the construction has started before 31st March 19. The same will be not considered ongoing project. What is the criteria for certifying that construction of the project has started 31st? If the earthwork for site preparation of the project has been completed and excavation for the foundation has started on or before 31st March 19, then construction project shall be considered to have started on or before 31st March 2019. Does promoter has a builder have the option to pay tax rate at the 12%? Definitely. If it is an ongoing project, if he file an Annex 4, then automatically he is eligible to pay 12% rate. Okay, the basic rate is 18%. After deducting the land cost, he is supposed to discharge the tax at 12%. Even he is eligible to take the input tax credit. That is possible. Now, once again, we will go to the question and answer. Okay. Rajshekhar KM. Flats are sold after obtaining the CC and landlord pays a GST on TDR on his share. Okay, developer collect the GST from landowner and pays to the government. Under reverse charge, developer is not paying the GST in this case. In my understanding is correct. Flats are sold after obtaining the CC and landlord pays the GST on TDR on his share. Developer collects the GST from landowner and pays to the government under reverse charge. Developer is not paying GST in this case. Definitely, sir. Rajshekhar, sir. The thing is, after completion, if you sell the property, there is no tax liability. But TDR to the extent of landowner, you are supposed to discharge the tax liability, one part, to the extent of landowner. But whatever relating to landowner, okay, whatever, say for example, at the time of completion, if you have not sold 25% of the flat, then automatically on that you are discharging the tax liability. On completion, you are supposed to pay the tax liability. Then whatever on that 25, if you sell the property, then automatically there is no tax liability. There is no GST. Here in your question, flats are sold obtaining the CC and landlord pays the GST on TDR on this share. Developer GST landowner, but developer share on completion, whatever balance flat, you are supposed to discharge the tax liability. Then after discharging that tax liability, then there is no question of once again tax. Try to understand. Say for example, you are having a joint development. On landowner share, whenever you complete the project, you will discharge it. During the course of booking, okay, you will discharge the tax liability. On completion at one shot, whatever balance also you will discharge the tax liability. Okay, then automatically TDR to the developer is exempt to the extent of sold. Okay, whatever balance TDR on flats, on that you are supposed to discharge the tax liability. Ultimately net effect is on each and everything you will discharge the tax liability under new scheme. If you are in old scheme, at the time of completion of the project, what you will do on balance flat, you are supposed to discharge the input tax credit. Then automatically balance flat you can sell it without GST or zero rate. Okay, now once again we will go to the PPT. What is the rate applicable 1st April to the construction of commercial apartments, shops, godowns, offices, etc.? No doubt at all. Okay, commercial apartment 5% and a commercial apartment 12%. You are supposed to discharge it. What is the GST rates? TDR, FSI, long-term lease land. Okay. Transfer of development or by way of an agreement on 31st March is exempted from tax even if the consideration for the same paid in part or full. Okay. But supply of TDR or FSI, long-term lease and land used for construction of residential apartment, tax on TDR is to be computed on the basis of the following formula. Okay, GST is applicable such a value in proportion to the construction of residential apartment remain unbooked on the date of issue of completion certificate, the first occupation, okay, whichever is earlier, then tax rate 1% or 5%, 18%, depending upon the tax rate, you are supposed to discharge the liability. If the supply of TDR or FSI long-term lease of land is used for the construction of commercial place, TDR is 18%. Who is liable GST on TDR and floor space index? Promoter is liable to pay the GST on reverse charge basis on TDR closed index after 1/4/2019. Before that, landowner has supposed to discharge it. Even if the landowner is not engaged in a regular business of land related activity, the transfer of land development by such an individual to the promoter is liable for GST. It considered as a supply of service section GST also. In case outward supply TDI, if developer another GST applicable is 18%. Okay, but after 1/4/2019, in case of residential apartment, it is exempt from tax to the extent of sold. Okay, TDR, what is TDR? What is FSI? What is long-term lease? The liability of tax arises on the date of completion or first occupation of the project, whichever is earlier. Thus, the GST would be applied on the value of which proportionate to the construction of residential apartment that remains unbooked on the date of issue of completion or first occupation. FSI received after 1st April 2000. If the consideration for FSI in the form of construct commercial residential apartment, liability arises on the date of issuance of completion certificate. If the consideration for FSI is a monetary form for residential apartment construction, liability as on the date of issuance of completion certificate. For a commercial apartment, liability to pay tax will arise immediately. For long-term liens received after 1st April 2000, liability arise on the date of issuance of completion certificate in case of construction of residential apartment. However, liability to pay tax shall arise immediately if such long-term lease is related to commercial price. Okay. Now, is GST applicable on the house when the completion certificate or occupational certificate is not received? Definitely. If the occupation or completion certificate is not received, you have to pay the GST when buying a house before receiving the CC or OC. Builder will charge. Ultimately, you are supposed to pay to the builder. Then is GST applicable for completed plats? We don't have to pay GST when the buying a plat after obtaining the completion certificate or occupational certificate. But logically, if you are in a new tax rate after 1/4/2019, if you start the project, logically you will end up with the tax payment. How I will tell you. Say for example, okay, in case of joint development, TDR will be taxable at the time of transferring the plat to the landowner. You are supposed to pay. Then whatever balance plat also you are supposed to pay the tax on TDR. Okay. Only thing is TDR is taxable at the rate of first occupation. But if you sell the property to the prospective buyers, whenever you are selling the property on market rate, you have to discharge the tax liability. Normally, first valuation value on booking date and end of the project is almost all double or 80% or 70% more. Then the GST liability, whenever you are selling to the outsider, it is more. And whenever you are discharging the tax liability based on TDR, it is less. Ultimately, that cost will borne by the prospective buyers only. That is why If they complete the project, if they sell it, GST liability is little bit less. And during the course of construction, if you buy it, GST liability is little bit more. But ultimately, little bit liability, hidden cost, it is a hidden cost, you are supposed to discharge it. Another 8 to 9 minutes. Dear members, if you are having a question, please ask. Okay. Otherwise, almost all we are come to an end. Who pays GST, builder or buyer? No doubt, the responsibility of collecting GST is relating to builder, but GST is an indirect tax. We know very well. Builder has to collect the GST and he is supposed to collect the GST from the prospective customer or customer. He will pay to the department or a government. That is why the buyer has to pay the GST to the builder at the time of purchase. Okay. I don't know. Almost all I have clarified all the query. If anybody is having any question, sir, chat box is not available. What is that? Okay. Rashika came. Your question is last question, I think. Other members, if they want to ask the question, they can ask. Okay. Otherwise, can a builder collect GST from customer? Yes, the buyer has to collect the GST from customers only. Okay. Thank you very much. Okay. Now my PPT is over. If anybody is having any question, we will discuss. Otherwise, what is the GST implication for development of residential apartment? Farooq Buri, sir, see, residential apartment, once again, two parts. If the residential apartment started before 1/4/2019, you are supposed to pay GST 18% after deducting 18% land cost. After deducting 1/3 land cost, next impact is 12% GST you have to pay. You are eligible to take the input tax credit. If the project started after 1/4/2019, you are supposed to pay 5%. Basic rate is 7.5%. Land cost is 2.5%. Net tax rate is 5%. Okay. GST impact is 5%, but there is no input tax credit. That is why GST implication of residential development project is 5%. But there is a hidden cost of input tax. Okay, but developer will not take the input tax credit. What ultimately, including input tax credit, including GST, okay, he will load to the customer. Over and above, you are supposed to pay 5%. Okay, purchase cost is equal to his basic price plus GST. Then his whatever value addition, labor charges, all these things. His profit over and above, you are supposed to pay 5%. Okay, then thank you. During the construction from whom developer collect the GST? During the construction from whom collector? Preeti Kunswal sir, what is your question? Preeti, madam or sir, maybe madam. What is your question? During the construction from whom developer will collect the GST? Automatically, during the course of construction, prospective buyers, they will book the plat. For each and every payment, he is supposed to discharge the tax liability. All big builders, what they will do, for each and every receipt, they will raise the invoice. Their invoice is basic cost plus GST, all whatever other charges, everything it involves. Okay. On practically for each and every payment, whatever you are paying, there is an element of GST. That I can tell. What ultimately developer will collect the GST from prospective buyers, those who are booked, and he will pay to the government. Okay, is the same for redevelopment. It is same for redevelopment, no doubt at all, sir. Even in the case of redevelopment, what you will do, you will demolish the constructed building and you will develop it. Okay, whenever you are handovering that plat to the prospective buyer, they are supposed to pay it. Then RREP affordable, what will be the GST rate on commercial portion? Even in commercial portion also, it is 5% only, sir. Okay, informative. Okay, it means before selling the GST already collected. Yeah, definitely, madam. See, Preeti, madam, how it will happen? Say, for example, at the time of construction, continuously customer will go to the builder. Okay, depending upon their requirement, they will book the plat. At the time of booking, maybe you will pay around 10 to 15 lakh. On that also there is a GST element. Then each and every alternative month or once in a quarter or every month, you will pay 1 or 2 lakh or 5 lakh. On that also you are supposed to discharge the tax liability. Okay. It means on booking and each and every payment there is a GST element. Registration will happen at the end. Okay, thank you. Once again, thank you to TRD, Tax Research Department, and our President Ashwin Dalawadi sir, and Vice President Nayak sir, and all TRD and Chairman of both the Direct Tax and Indirect Tax Department. Once again, thank you very much to each and everybody. Another 2 to 3 minutes are there. If you ask the question, well and good. Otherwise, I will close it. Thank you very much. Dear members, if you want to ask any question, you can ask, or otherwise, if you need some more explanation relating to any point, I will explain. As a whole, there is a one project and there is a joint development project. In case of one project, there is a land cost. Maybe in case of development of site, in case of development of plat also. In case of joint development, 3 parties. One is developer, another one is landowner, and prospective buyers. What ultimately prospective buyers, for him there is no difference between whether it is a joint project or a one project. He has to pay tax to the developer, or if you buy from landowner, you have to pay to the landowner. In case of joint development, there is a tax implication between the developer and landowner at the time of transferring the sites or a flats. Okay, developer has to collect the tax from landowner. He has to discharge it. Okay, there is. Thank you, sir. Thank you, sir. Okay. Okay. In case of input reversal paid to the DRC 3 challan for IGST supply, what will the place of supply? For example, if you pay IGST pertaining to Odisha for input tax reserve Karnataka, what is the place of supply? Always input tax reversal. Whenever you are paying a DRC, if it is a IGST, okay, from where you have purchased, you are supposed to discharge the IGST. Okay, then place of supply is from where you have purchased. In case of local, place of supply is local. It means if you purchase from other state, IGST, if you purchase from state, say same state, SGST and CGST, based on that you have to rate the DRC. Okay. In case of builder sell a plat or template before completion certificate, there is any GST liability on purchaser. Plat before completion certificate, definitely, sir. Okay, if the builder sell the plat before completion, then automatically he is supposed to levy the GST. Manoj Kumar sir, in case of new plat purchase, GST is applicable at each stage. Sir, in case of new plat purchases, at the time of booking onwards, for each and every payment you are supposed to give the GST. Okay, but after completion, if you purchase, then there is no GST. In case of new flat purchase, GST is applicable at each stage. At each stage, no doubt at all. But if you purchase after completion, there is no GST. Buying a flat during the construction or after completion, which is beneficial. Sir, it's all depending upon the cost to cost. After completion, normally builder will increase the price, but there is no GST. During the course of construction, okay, there is a GST, but builder will charge low because initial stages, he want to collect more money to support his cash flow. Okay, it's all depending upon the market also. Now I have clarified each and every query, and I have explained the concept of all the real estate transaction. Okay, thank you very much to once again TRD. Over to TRD, Tax Return Research Department. Tinku Ghosh, madam.
Yes, sir.
4:30, no time?
Yeah, it is 4:30, 4:31. So it can be concluded now if it is over.
Yeah. From my side, everything is over. I have clarified all the queries and each and every question also. Builder is doing construction in Haryana and have a GST office in Delhi. Sir, all practical purposes, if you are having a project at Haryana and office at Delhi, better to register your whatever office GST registration in Haryana also. Otherwise, it is very difficult to manage, because whatever you are getting material in Haryana, you will not get the credit. That is why better to register with Haryana GST authority. Any other question? It is a mandatory to have a GST number in Haryana. Better, sir, it is advisable. It is a cost effective. That much I can tell. Okay. Whether it is a mandatory, I don't have answer. Without registration also you can do it, but it is beneficial to you. It is cost effective. Better to register with Haryana authority also. Madam, it is over. Thank you very much. Okay, over to TRD, Tax Research Department.
We conclude, sir?
Yeah, you can conclude it.
Okay, sir. Thank you, sir. Thank you for this session. And thank you for the participants to participate in this program. And hope we will again organize such kind of event in future also. Thank you, sir. Thank you, everybody.
Thank you very much, madam. Okay, see you.